Welcome, everyone, to our first series of questions people have to real estate brokers and or mortgage lenders. My name is Rafael Terrazas. I'm a broker at St. Rogers Realty here in El Paso, and I have my friend here with me, Gerardo Castrellon, which is a mortgage broker. And we wanted to discuss with you all a scenario that's semi-often, and people think this way, or this scenario comes up because they don't have all the information. Welcome, Gerardo.
Thank you, Rafael. Thank you for the introduction. Like Rafael mentioned, I'm a mortgage broker. Our company is called Smart Mortgage, and happy to answer the questions that you have, Rafa.
So one scenario that I've had recently is that one of my clients, specifically buyers, asked me like, "Hey, you know what? Just call me when interest rates decrease. When interest rates go low, that's when I'll be ready to buy the property." How can we educate our clients, our buyers, or the public as far as what that really means? Call me back or I'll be ready to purchase when interest rates decrease.
It's a very common question that I also get all the time. The thing that we need to educate our clients on is that we can always control what we're buying the property for and not so much interest rates. Rates change all the time. And if we buy today, we are gaining equity in the long run. Even if we wait 1 or 2 years to purchase when interest rates are down, if you didn't buy today, you're losing the opportunity cost of the equity that you're going to gain.
I agree. Now, the other thing is, when will interest rates decrease?
That is the $1,000,000 question that we all hope to be able to answer. We had seen a good drop in rates for the past months, but we've seen a highly increase the past couple of months because of the war with Iran, oil prices that is causing doubts about inflation. When are they going to decrease? Who knows? If a buyer in 1970 said the same question, hey, I'm going to wait until the rates drop, they would have waited 22 years to have purchased a house because everybody wants rates to drop, but unfortunately, we cannot control what rates are going to do.
If you said 22 years, how much would that property would have increased in value, right, by that time?
Yeah, for example, to give you some statistics, in 1971, interest rates were the national average 7.69%, and they didn't come down until 1993, 7.86, 1998, 7.15, and you would have lost about 150% in equity gain. So think about that. Like, you could have bought a house and probably paid it off before interest rates came down.
And I think the other question is, how much do you really need it to go down, right? Because if right now an interest rate is 6.5% per se, the odds of it going back to 4.5%, it's pretty slim in the next year or two. But let's just say they go down to 5.99. How much does that really save you on your mortgage payment?
So today's June 2nd of 2026. The average 30-year fixed conventional interest rate with excellent credit would be around 6.57. And that's you can look it up at Mortgage News Daily. With a 6.57, if you purchase a house for $250,000, the median price of El Paso, Texas, your payment with taxes, insurance, mortgage insurance would be around $2,220. And say in 1 year, they come down to 5.97, so about 60 basis points. First of all, that same property is now worth 258 because of the historical appreciation of the properties in El Paso. So you're going to start with a higher loan amount, your interest rate is going to be lower, and your payment is going to be $2,200. So basically, you're saving $19 a month, but you lost on $8,750 on equity gain, plus whatever you added to your principal. But it also costs you all the rent that you paid for that year. If you're paying $1,400 in rent that would mean that you also spent $16,800 by not buying.
You could argue, I guess, that maybe because not the full amount of your mortgage goes to the principal, right? So you could potentially argue that it's similar. But one thing that I always see, and this is only in the scenario where you as a buyer aren't buying to your limit, right? If your limit is, you have more than $2,200 to spend on a monthly basis, right? If that's your max, then this scenario doesn't apply. But let's just say it wasn't your max. Let's just say you were making a conservative buy and you could easily spend another $400 a month. If you give those $400 on a monthly basis to your principal, the interest amount that you're paying on a yearly basis will substantially decrease, especially in the long run. So, yes, interest rate is important, but you can always pay off that property sooner, paying less interest, or the reality is you're going to probably move in the next 7 years. So you're only going to be paying that interest for 7 years, not the full 30 years, which it's amortized over. Wouldn't you agree?
Correct. And to dig a little bit in the point that you said, that maybe not everybody's going to be able to make a $2,200 payment. So it is our job to advise and show you what is financially responsible for you to get into a home. Because the last thing that we want to do is tell you you qualify for X amount of dollars, that's your full maximum budget, and get you that house, because in a few years you're going to be drowning, and we don't want that for you. We want to make an educated purchase and the means that you can afford.
I agree. And one thing to add to this whole conversation is that right now, June 2nd, 2026, there are more properties than buyers out there. So that means that you as a buyer have a little bit more leverage. There are properties that haven't sold. There are sellers that are looking to move cities or that are looking to just sell their home because it's vacant and they have two mortgages. And you have quite a bit of leverage to negotiate. So that 0.5% interest, or let's just even call it 1% interest, which probably won't come in the short term, you could save a lot of that by negotiating. And in addition to, depending on the loan and depending on the details, you could also request the seller to contribute more towards your closing costs so that you can buy down your rate. So interest rate isn't really the issue. I would rather have an interest rate problem than I can't find a house problem if it were me buying.
Correct. And like you said, like right now, it's a buyer's market. Sellers are incentivizing buyers to purchase their properties. If rates come down, it's going to open the pool of more qualified buyers. And what is that going to do? It's going to bring more demand to buy the house that are for sale. So you're going to have houses appreciating more in value because there's more competition to purchase the same house, and it's just going to cost you more. If you buy today and in 2 years rates come down, you already had the purchase price 2 years prior, so you could refinance into the lower rate, save some money, and not have to pay the accumulated appreciation that happened during those 2 years.
Absolutely. You can always refinance, but you can't go back and buy the home 2 years ago.
Correct.
So what would you like to leave our audience with today, Gerardo? What message would you like to leave them with in order for them to stop procrastinating buying their new home?
I would say schedule a call with myself, with Rafael, so we can see your exact scenario, because everybody's different. And it might make sense to buy today. It might make sense to buy in a year. But at the end of the day, like people say, the best time to have purchased a house was 20 years ago. Mm-hmm. The second best time is today. So if we can help you figure out a strategy to get into a house in a responsible way, in a responsible financial way that will lead to your financial well-being in the future, please reach out to us, and happy to take a look.
I agree. And the two things I would like to tell people that are considering buying is, number one, save as much as you can. the more money you have in the bank, the easier it'll be for you to purchase a home. And the second thing would be buy the right home regardless of the time. And by the right home, I'm not talking about the most beautiful home. I'm talking about the home that makes sense for your time in life, your payment, your location, your needs. So don't wait for the perfect timing. Prepare yourself for the perfect home.
Well said, Rafa.
Thank you guys. We'll see you soon.